we found that there's actually a sizable gap between the amount of technology homebuyers expect during the closing process and what they're actually using when they close on a home.
Greetings, everybody. If this is your first time joining us, welcome to the Mortgage Innovators podcast, where we deliver fresh and hopefully fun and entertaining insights on all things mortgage and innovation that are propelling our industry forward. My name is Margaret Chiavini. I am with Caliber Home Loans, and every Tuesday you can find our rotating group of co-hosts, or what our producers have dubbed the Innovative Five. We all share our own unique connection to the industry. This week, I'm really lucky to have joining us Sue from Total Expert. Hi, Sue.
Hey, everybody. Hey, Margaret.
And also, of course, Michael from American Pacific. Hi, Michael.
Hey, how's it going?
Great. Okay, well, this week is extra special because we have our special guest, Ty Ciola from Qualia. Qualia is our sponsor, and once a month we're really lucky to have Qualia visit and chat with us, especially on the neat stuff that they've got going on in the innovation and technology space. So welcome, Ty.
Thanks, Margaret. Appreciate you having me.
Absolutely. So we chatted with you about a month ago, excited about today. Can you let us know what's been happening?
Yeah, we've got there's a lot of great things moving, and we're really excited to honestly just get back to conferences very shortly and see everyone face to face. I think everyone is. So what we've actually been up to recently, we have been monitoring consumer preferences. And we did this back in November 2020. We worked with a third-party research firm to track homebuyer expectations, and we actually recommissioned a survey, a homebuyer sentiment index, in the last few weeks that we'll be releasing very shortly to compare how homebuyer expectations have actually shifted since November, just because a lot has changed in the past 6 or 7 months.
Wow, that is so cool. So can you share with us what did you learn?
Yeah, there's a couple of good points. I think what we really focused on, current, past, and future expectations, I think, and the theme that kept popping up over and over again was technology, right? And that's also the theme of this podcast. So we looked at things like e-closings, who's working with the borrowers, working with how their experiences with the real estate agent, their title company and settlement agent, their loan officer, and what that experience was like from a technology perspective. So one of the really interesting points was around like consumer expectations when it comes to like closings, for example. So we found that there's actually a sizable gap between the amount of technology homebuyers expect during the closing process and what they're actually using when they close on a home. So if you look at the data, the majority, 51% of future homebuyers anticipate that they will use some sort of digital signing platform to e-sign closing documents. However, only about 40% of recent homebuyers actually report using an e-sign platform. And similarly, about half, 45% of future homebuyers expect to use a secure mobile app or web-based portal to exchange information and receive updates in the closing, yet only 27% of homebuyers report actually using one.
Wow. So there's a big gap between the expectations and what's actually happening.
Yeah, 100%. I think we saw this, and we can get into a little bit later, up front, even on the point of sale side, and we're seeing it all the way, especially down into the closings. Michael, I know this is a little bit of your wheelhouse. Any thoughts on what you guys have been experiencing in-house, with your digital tech stack?
Yeah, I think it's interesting, like writing those numbers down just as you're saying it, because it kind of lines up with kind of what I was expecting to hear a little bit. And I think because so much of the lending side really, at least for us being focusing just on the residential side, and also, having our loan officers that are really controlling a lot of that point of sale, is really what are the loan officers leveraging or exposing the clients to? And I think that plays a big part of it, with us being distributive retail, versus, some of the more online. So I'd almost even wonder, going down the line, what type of differences you'll see between the consumer direct or online lenders versus the distributive retail. And I bet you would almost see that gap even widen a little bit, because I do think that there is that piece of fear, I think, from the loan officer side of, is technology going to potentially replace me? And so how comfortable is the loan officer in exposing their clients to that technology, that that there are misnomers out there that this is going to replace me or take me out of the transaction. So I think that actually does play into some of the expectations versus what they're seeing, in my opinion.
That's a really good point, Michael, and actually feeds right into the next stat that we were looking at. So when you actually talk about the application process, 36% of borrowers, 100% applied for the mortgage application completely online, and 45% of them applied online, but with the completion of with the assistance of a loan officer or another representative, right? So we're looking at over 80% right there, some sort of application online. Honestly, it would be great to see some information, just like you said, or data breaking down direct to consumer versus a retail and what that breakdown was. But I think that hits the nail on the head with exactly what you were saying right there.
And hey, Michael, so just to make sure I understand what you were saying, that the loan officer may actually have the technology to deliver to the customer what they want, but they may actually be holding themselves back.
Yeah, in certain instances, I believe that that's the case, and I think it's for a multitude of reasons. I know I mentioned the piece about just the fear of technology, but some is really, again, a lot of loan officers, their value proposition is their expertise and what they're bringing to the table, and they really want to guide their borrowers through that entire experience. And so for some people, that starts with the application. I was actually just talking to one of our top producing branch managers at an advisory council that we had last week, and like what she said is, my borrowers do the application verbally and they don't even realize that they're doing an application. She was like, because she builds it into a 30-minute talk track where it's her just having a conversation, and she's literally got like a little intake form that she's taking down the notes, and by the end of it, it gets her pretty much a complete application, but the borrower doesn't even realize that they just applied. And she even mentioned that there's times that then the borrower will say, okay, so are you sending me an application now? And she's like, oh no, like I'm going to send you over the e-consent because I already got the application. And so those are some of some people, because they've got those relationships and they know really how to conduct those conversations, that they're maybe not sending an application link because they're doing it that way, and various other ways. And I know I see Sue kind of shaking her head, because I think Sue, with her experience, can probably even touch on some of that.
Well, I'm giggling partly because that was me when I was an originator many years ago. It was very much that way. You were having a conversation, you're building a relationship, you're asking the right questions to go, kind of the question beneath the question, sometimes the fifth page of the application, as we used to call it. But I think it's interesting. It goes back a little bit to something you said, Michael, about a loan officer being afraid that technology is going to take their place. And, I kind of have a belief that the loan officers, like, technology is not here to replace a loan officer, but the loan officers who are leveraging technology in the right ways are going to replace the loan officers who don't. So but I think there's a balance. I think about that fantastic, producer that you have who's doing that, but are they leveraging technology in all the ways so that they're doing more of those? As the business starts to, tighten up, it gets more competitive. If that's your competitive edge, then rock on. But you better automate everything else so that you're able to do as much of that as possible and have your highest and best use in that way. That's what technology is for, is to create more times for more opportunities for that human interaction, not to replace it.
Yeah, I love that, because I wonder, in that example, Michael, that you had, where the loan officer is taking the application, the customer doesn't even realize it. Is that the same customer that said they expected to fill it out digitally, but the conversation was so delightful that, wow, it exceeded their expectation, as an example. Mm-hmm. So that's pretty neat. So Ty, this is fantastic, this survey that you did. Will this survey actually be available? Can you talk to us a little bit about that? You all add so much value. Can our listeners find this survey so that they can look at what homeowners are expecting?
Yeah, it'll be available very shortly, Margaret. My recommendation for all the folks listening is just go ahead and follow us on LinkedIn. It'll be posted online very shortly, and they'll be able to go ahead, download the sentiment index. And again, there's a lot of great data points, I think, from application all the way to close there, and just in terms of what the expectations are right now for buyers, which is really interesting.
So Ty, you're
Oh,
telling
that's
us, first of
fantastic.
all, we got to follow you on LinkedIn.
You do.
Yes.
Because you're going to post it. And I know it's not, I think you said it's not on the website yet because this is like hot off the press, right?
Mhm.
But qualia.com has a ton of really interesting resources. Like, I spent a little time there looking at some of the case studies and white papers and resources and how to compete in the age of fintech. I mean, there's like some really good stuff there. So qualia.com, hopefully everybody knows how to spell it, right? A lot of vowels in there, Qualia, right?
You got
Qualia.com.
it. You got it. Thanks,
Tons
Sue.
of good resources. And now you got a lot of vowels in your last name as well, Ty, but we'll be Cieloha, is that right?
You got it.
All right, so all those vowels, we'll follow you on LinkedIn and look for that updated home buyer sentiment survey, because I'm really jazzed to get those numbers. I'm like Michael, I'm writing those things down because I want to know. So that's good stuff.
That's fantastic. Well, Ty, thank you so much. We appreciate all the contribution that you make to mortgageinnovators.com and all your support. And we're excited to see you in about a month.
I look forward to it, and thanks for having me again.
Okay, you bet. Bye-bye.
Take care.
Wow, what a neat conversation. One of the things that I wanted to I think we should continue this conversation because it's so rich. How does what Ty and Qualia shared with us, how's that going to drive the decisions for the tech stack? In other words, how do we, last week we talked about, what is the MVP tech stack? How do you build kind of the best tech stack? How do we integrate what the customer wants into what we're building? And then how do we make sure we're staying on track?
A lot of things go into it, right? The couple things I think of out of the gate is really taking the data that's available and really using that to help make the decisions. Because I think it's one thing to go to a loan officer and say, okay, you have to use this. And it's like, okay, well, I'm successful without that. And I'm doing, great without using that thing. It's another thing to say, hey, do the A/B testing, do the, and this is something that I know that, Sue and Total Expert do really well when they're rolling something out. They'll do A/B testing to really see what efficiencies is that creating. What's the time between, these two actions? And, are we creating efficiencies? Are we lowering, the cost to manufacture a loan? Those are the things to me that I think are really going to play that importance, because it's a lot more beneficial for the loan officer if I go to them and I say, hey, we've had people using this, and when the borrower is doing the application on here, on average, we're seeing that on a digital closing where they're doing, A through F online, we're closing 3 days faster. Mm-hmm. Or if they're using, mobile disclosures and they're signing it, their disclosures on a mobile app, that's on average a 3-hour turn time versus a 2-day when they're doing it a different route. Those are the things to me that really then start to drive that behavior, because it's like, it's almost in that fear of missing out. Like, wait a second, you're closing like that many days quicker in this competitive of a market? Like, yes, sign me up.
Yeah, you know what, the other thing I would add to that, because it's when you're both looking for those efficiencies, which again, as the year goes on and things become more competitive, everybody's going to be really looking for those efficiencies to help drive, the profit margins. And I also think the customer experience, that's obviously, Michael, you and I talk about that a lot. Margaret, we've talked about that a lot, on this podcast. But I think when you, I think in the last year, particularly on a refinance, people were happy just to get closed, right? And lenders were happy just to get them closed. And I think it's going to start to kind of shift back to a renewed focus on what is that experience like. And so you do think about, if they have this really cool digital experience, interspersed with the right human interactions, and then they have a totally different experience at the closing, that's where I think it can cause that's the last impression that somebody has. And even though the title company is, you know, they're responsible for so much of it, they think it's all the lender, right? They think it's all you. They think, you know, they think the loan officer is the one that, you know, orchestrated that whole experience. And so you just want to make sure that, you know, you invest so much. I know that both of you at Caliber and at APM, you're investing so much in these incredible experiences. And the last thing that you'd want is for the last impression of that customer on that very stressful closing day to be like, wah, wah, like all of a sudden it was a weird experience. And so that's why I think some of these insights are so powerful. And to your point, Michael, to really talk about, you know, like if you're doing surveys after the fact, you know, what are you learning about that? What was that experience like for them? Because that will be their final impression of that process.
Yep.
Yeah, that's a great point.
You know, and I think and I think what I'm even seeing, you know, in a couple of our LOs, you know, is really even going those next steps to the customer experience, you know, aspect that Sue touched on. It's sometimes those little minute details that really separate, you know, good, you know, producers from like the great ones. And it's things like, I had somebody that told me that they have even went to their agents to find out what signing software they use for their purchase contracts. Because in saying, hey, can you use the same e-sign software that we're using, so that then it's creating a seamless experience for the client out of the gate, even if just how they're signing their purchase agreement versus how they're going to sign their disclosures. And so they're thinking, and to me, that was like, whoa, like that is next level in my opinion, because it's like, you're really looking at the customer experience. If you're talking about like, I need you to use the same signing software that we do, just so that the same branding, the same way that they click sign here is consistent from start to finish. Like that's a wow experience for our client, in my opinion.
Yeah. Well, and Margaret, you're hosting, but let me ask you, because I know you've got a lot of perspectives and opinions on this. So I mean, how do you see this?
Well, my perspective is a little bit different because I represent the correspondent side as opposed to like Michael that's on the retail side. But what's been really meaningful for me in this conversation is two things. One is the customer can say that their expectations are X, and yet you can deliver a superior customer experience not doing it. So I loved what Ty at Qualia said. He said that, what was it? That 51% expected a digital signing. And even if we just take that over, and I can't remember what the percentage was of an application, and then yet Michael contrasts that with the top producer, and that top producer is actually making that experience with the application probably so far superior to a online application that I think that's worth thinking about. And then the second thing that I really feel like is super meaningful, and we have to underscore it, is Michael, what you were talking about you loop back, and there are different ways to think of things like that. You know, what software are you using to sign the purchase agreement? And I'm going to do the same one, make it easy. And then what that made me think about, Sue, was another conversation about how, like, one of the things you all do at Total Expert is you help your customers with best practices. Mm-hmm. So now you take like what APM is talking about with that becomes a best practice. And then now it's going back to choosing a technology vendor. And Sue, what you said, that you really want your technology vendor to be your partner.
Yeah.
So I think there's a lot of richness in this conversation. We need the stats. What do people expect? And then are they saying we expect this because what they really want is they want an experience, which is what you guys said. They want a customer experience.
It's interesting though, because I'm thinking about that loan officer taking that application in the way that I would have. And for some people, that would be perfect and magical. For me, that would kill me because I want to fill out the loan application while I'm multitasking and I'm on a meeting, doing it over here. So, and I bet, you know, she doesn't do it for everybody. She probably does it for the ones that, you know, are the right ones to do it for. And so it's knowing your audience too. I mean, that's part of the experience. Is I think that's interesting. These people were expecting this. They got something different. For some people, it being different than their expectations might have been a good thing. For some people, being different from their expectations, it wasn't a good thing. So I don't know. It's interesting food for thought, knowing your audience.
That's a great point, and I know you've talked about that a lot as we've talked about different subjects, knowing your audience and really almost having the wisdom to understand, you know, what aspects does one customer want versus another.
Yep.
So I think that's really important.
Yeah, I think of it as like preferred contact method, right? You know, do you want, you know, do you want text or phone? And then you get that person that's like, why aren't you showing me email? Like, I want email so I can save a record of, you know, what we talk about. So it's like, yeah, I think to that point, I think it's really understanding your customer up front. And again, having the levers to pull to provide that experience to them, but then still have the scalability on the back end of, you know, regardless whether they want to do the application themselves or I'm going to take it, what then happens, you know, after that point from an operational standpoint, the way that the file is flowing through the system, where then it doesn't matter what funnel it comes in out of the gate, it's still going to be a consistent experience and process for them as it, you know, goes on throughout that loan process.
Right on.
Hey, Sue, this might be a question for you. Is it possible to sort of have built in the technology to almost even ask the customer, hey, look, we have the ability.
Absolutely.
You know,
You are spot on. Yes.
yeah.
And, you know, the way that we do it is called journeys. But you want to be able to have something that is responsive. You know, the old way of marketing, and there's all kinds of great technologies out there, but the old way of doing it really was, I'm going to drip on their head 10 times and, you know, tell them something and it's going to be one size fits all. The new way of doing things really is asking the question, you know, finding out what is your preferred path, you know, kind of what that person wants, and then send that person off down a different journey based on what their responses and their preferences are. And that's how you're really creating a very personalized and very humanized customer experience.
That's so neat. So we're kind of coming to the end. In just wrapping up a little bit, you know, when Ty was talking and I was thinking about home buyer expectations and how would that change decisions that are made in picking vendors, in picking the tech stack. Any sort of final thoughts on that? I always like, you know, action items. What are our follow-ups? What are the next steps? And especially for our audience, that they can leave and say, wow, you know, this is a homework assignment for me to go and check this, or let me double check against our standard practices and make sure that whatever we're doing is as rigorous as what Sue and Michael, you know, recommended. So any thoughts on that?
Yeah, I'll give one thought and then I'll turn it over to Mr. Guidotti to you know, give us the final parting words of wisdom. But I do think, you know, again, I would encourage people to check out qualia.com. There's incredible resources there, but I just think that's a really interesting, it's a very interesting point at how the numbers are off in what people are expecting to happen and what did happen. And, you know, so really kind of I would encourage people to take a good hard look at really understanding what is in place to ensure that that final thing, that last, you know, piece of that transaction that is going to be in their memory, is that up to the standards that you want? Or you're just like, well, I hope the random thing works itself out, you know, and that's the final thing that they're going to remember about us. So I actually think that's something that is very worthy of a lot of consideration as more lenders are turning and looking at their customer experience. You know, we'll hopefully have a chance to take a little bit of a breath this year, pay attention to those things, just from an efficiency standpoint, but just purely from a customer experience standpoint as well. Is that piece of the transaction as solid and operationalized as the rest of what you put into place?
Yeah, and that's great. I think the additional thing, you know, that I think of is really the benchmarking, if you can, you know, taking a step back, really looking at, you know, with the technology vendor or whoever you're looking at, you know, what are you looking to solve for or improve upon, and what data do you have to use as a benchmark to then see how that helps make that improvement. I think that data and really showing people the results, and whether it's from a customer standpoint, surveys, what was the survey results from customers on this process and this new thing that we're rolling out in a beta test, what was the customer feedback on that? And you could say, look, on average, we went from an 8 to a 9.5 doing it this way. And those are the things that I think really make it meaningful to help with adoption and getting people to use new technology. So that would be something that I would just recommend is the benchmarking and the data based on whatever you're trying to improve on.
That's so great. And Michael, would you say that the data and the benchmarking, because a lot of the conversations that we've had, you talk about how at APM, they're really project plans and they're very formalized. And would you say that data and benchmarking also falls into almost like a project plan?
Yeah, 100%. I think that the data goes into that project plan because, again, your project plan should be identifying, what are you looking to solve for? What are the vendors out there that are, that are available that will help you with that? And again, where are you going from and where are you headed to? What are you looking to get out of that? And then, having the data to kind of cross-reference and, use to see, okay, are we hitting that? And again, that's where I think the real partnership comes into play with your vendors, because then you're on that journey together.
Yeah, fantastic. Sue, Michael, I love talking with you. I love your insights. I love your creativity and really just your commitment to our industry and to partnering. So thank you both very, very much. And thank you to our audience for listening to today's episode. If you liked what you heard, be sure to subscribe to Mortgage Innovators YouTube channel or wherever you podcast. So until next time, so long.